Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, January 16th, 2009. Well, as we get into today's intraday video, folks, I want to discuss what's going on in the market today because it's a very interesting market situation. We've seen a gap up. We've seen a hard sell to where the point where the market was down significantly. We've seen a reversal back to the upside, and the options expiration whipsaw action continues. And this is what we always talk about when we trade, train our people in the research center, our investors, our following, our premium subscribers in the research center. We train them to understand these different moves in the market because being prepared will save you money. That's what it comes down to. So in any case, what I want to show you here, folks, first is a couple key different levels on this intraday market. Now, we had a gap up this morning, a decent gap up, and then ultimately what we saw was a sell-off, and once we breached a certain level, and I want to show you that level, you knew the market was going to at least do gap fill, and then after gap fill, you knew it was going to even do more, and I'll show you why. Well, first of all, let's take a look at the gap up. So the market gapped up here. What do you know first of all here? You have a key resistance area right up above. Alright, so that's number one. That's the first thing you have to be aware of. So whatever you gap up in this area, chances are the most you're going to get out of an additional move up is up to here, and it may not even do that. Whenever you see a gap up following a move of this proportion, where the market goes that high, in a span of about, 3 or 4 hours of market time, you have to understand that that's a big move the market needs to consolidate. So what happens? Well, first of all, you gap up here, and you start to come down. Number one support line is going to be right here. Okay? This is your number one support line. Notice how it coincides basically with the 20 moving average and the highs of these candles, this area right over here. So once you gap up and you start to fall, you fall down right into the 10 o'clock time frame and hit that line, and you get a little bit of a bounce. So that's your idea there, and those of us that are scalpers out there can play that very accurately. If you're not a scalper, you should just stay away because you have to be in and out very quickly. As you can see, again, we're looking at the SPY intraday 10-minute on this chart. Now, the key, again, is to note as soon as that breaks down, and look at it, hit here, bounced up all the way back up to this high, came back in, closed there. The next candle pierced it, but the next candle didn't confirm that move down. You never went lower than the low of this candle, in this candle, the green candle. And in fact, you recaptured that line. So until you confirm it, it's not a true breakdown. Now, the interesting thing is you got another little bit of a bounce up, ultimately coming back in, testing it again, then closing on it, then coming down, and at this point, you really break that low, and you can start looking for more downside. The only negative here is you're right into the 20 moving average. So as a trader, I'd look for the next move below the 20 for a short. All right, because the break of here coincides with the 20, which is another area of support. So once you get to this point and close right here, you have to wait for a breakdown from the 20, which comes a few candles later after consolidation on the 20, and this is when the downside starts. You can see a flush, small bounce, flush, 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 flush. Where do you go? Right to the low here, guys. Look at this. How do you know you're going to go there? Well, this is the low, and I called this out in the chat room today. And again, you have to understand that, folks, is that pull back, look for these support lines from yesterday's candles and charts. It's going to be a key level, all right? Now, the other thing I'd like to point out is how do you know this area is going to be support over here as well, right around the 20? Well, first of all, you know this line is support, and you're hugging it still. And you know the 20 support, but also look at this. So in addition, you have another trend line you can draw in from the lows here to the lows over here. And where does it coincide? Right here. So you know if this level breaks right over here, where you have this line, the 20 moving average curving, and this trend line, you're going to have significant downside in the market. Sure enough, you break, and then look at the fall you get afterwards, all the way down to this level, which is going to be a key covering area. You could have even covered at the 50 moving average. That's up to you guys. You'd at least want to take half off the table there, and then probably the rest right at this point. But in any case, that's the way you analyze this chart on the downside, and how you understand where it could go and where it ended up and did go. Now, on the upside, the key here is, folks, understanding this is going to be major support because this was the first move and the pullback of your W pattern. Remember, WV patterns. We had a huge WV pattern. I discussed this in the research center last night to give everyone an update on what we thought the market would be doing. And you see the W, V, and then the gap up. So that's a completion of a WV pattern because you had the V pattern completed up on this gap up. Then you had to be also very careful. In addition, you had this resistance line of the 200 moving average, which was going to be major resistance anyways. But note that now, guys, all right? So note that fall all the way back down to this. Then you start to get a bounce. Where does that bounce go, guys? Draw and extend your line right here. Okay? Look at that. You had a move up, piercing, coming back in, and then trading a little bit on the sideways pattern. Also, note this area right here where the three support lines cross. All right? So you take this 20 moving average, this line, and they're all right around here. Draw that across. You know there's going to be a lot of resistance right in this area, and the market's going to have a lot of trouble getting above it. Sure enough, what happens on the bounce? You come up right to that area, right over here, and now you're starting to consolidate off that move. Now, the nice thing about this, folks, is you have on the downside the 20 and the 50 moving average starting to tick up. All right, the 50 moving average is actually on the upside, turning up here, and the 20 is beginning to turn up. When both of them turn up and this continues to consolidate, this could be a bullish pattern. The only negative is you still have this major resistance line here, and look, the 50 moving average is creeping lower. The 200 moving average is creeping lower as well. So there's a lot of resistance on the upside, yet there's a lot of support on the downside right here. A lot of support right around this area, right down here. So it's going to be interesting to see where this market goes. And again, we'll analyze it to the fullest extent and project out our key levels in the nightly Research Center video and the daily market report in tonight's Research Center for premium subscribers. But again, just note that pattern. This is a bullish pattern on the 10-minute. The question is, what does the 60-minute look like? And that's what we're going to go to next. Okay, volume today, remember Options X ended today. You had the final Options X expiring today. And also, you have to take into account that the volume in the afternoon, sometimes on a Friday after Options X, especially before a long holiday weekend, could be a little on the lower side. So, keep that in mind, folks. Now, let's flip over to the 60-minute. And this is what I really wanted to show you guys. Because I mentioned that this was a bullish pattern on the intraday. So, bullish, this is a bullish pattern. Alright, but then on the 60-minute, it's actually a bearish pattern, and that's the key why it's important to understand all the different levels and all the different time frames, because you need to put all the pieces of the puzzle together. You don't take out a puzzle, a 500-piece puzzle, and say, let me put together 10 pieces and then, let's just hang it on the wall. You have to do all 500 pieces to really get a good picture of what it is, or at least 95% of it to really understand what it is and make it beautiful. So in any case, what you saw yesterday was the monster move up. And again, you can see that final reversal. Here was the resistance line from yesterday. You gapped above it here. You gapped above it today, but notice how you recaptured it to the downside. But then you put in a little bit of a bottoming tail, and you came right back up. This is a key level, and notice, folks, the resistance here, or support, as you may call it, depending on if you're above or below it, is this line right across. Notice where the market is currently, right on that line. So that's telling you we're on a pivotal point in this market today, and you have to be cautious. The other thing I want to point out is this down move with this up move is actually a bearish flag pattern from this down move starting. So even though the 10-minute chart is somewhat bullish, the 60-minute is bearish. What does that mean? Would that mean that I go long or short on this market? It means that in general, I would stay neutral until we get a better sense. And remember, here's the intraday 10-minute, and you have all this resistance up here, yet this support down here. So that should allude to the fact that you probably want to be cautious anyways here, and just maybe play it from the sidelines from an intraday perspective. But you add in the bearish portion of this chart pattern on the 60, and that's confirming that you want to stay kind of on the sidelines here and see if the pattern changes to let you see things a little differently. All right? And this is all this analysis you got to be doing. And again, I want to stress this. In the Research Center, we focus on the daily, the weekly, the monthly, the intraday, and we look at gold, oil, the U.S. dollar, any stocks in motion like Goldman Sachs or Apple. We'll focus on it all. But the key is you have to look at all the pieces of the puzzle to get the fair value of where this market could go. All right? If I look at the 10-minute today, I'd say, oh, that's kind of bullish. But if you look at the 60-minute, now you're saying that's kind of bearish. And it's important to put all the pieces of the puzzle together. Again, folks, financials today are very, very weak, extremely weak today, and that's very important to note. You have to watch those financials. Commodities like oil and gold are key, and that's actually doing okay today. You have those flat to positive on the day. Oil and gold flat to positive. Gold actually up nicely today, but the financials are lagging, and that's keeping the market in this kind of limbo state where we have to see where it goes next week. So follow the Research Center, guys. Join the premium subscribers on the Research Center to get all the up-to-date information. Whether you're an investor, it's actually more important for investors and swing traders than even day traders, although day traders like to learn as well. But the educational side of the premium subscriber base in the Research Center is fantastic, as is all the market calls. We continue to be almost dead on every market call over the last 2 years that we've made. All right, folks, have a wonderful week and weekend, and we'll see you on Tuesday since Monday's a holiday. I'll put out a weekend video as well, though, for all you guys to kind of update yourself and keep you guys all posted. Take care.